The robot revolution isn't coming, it's already here, and it's creating a multi-trillion-dollar opportunity for investors. Right now, a handful of companies are embedding robotics and AI into our world, quietly building the future. From surgeon-guided robots in hospitals to intelligent warehouse systems to AI automating office work, these companies are transforming entire industries. In this video, I'll break down 3 market leaders in the robotics boom, why they're on my radar, and how they could fit into a long-term wealth-building portfolio. So grab your coffee, hit that like button, subscribe to the channel, and let's dive in. Let's start with a giant in medical technology, Intuitive Surgical, ticker ISRG. This is a company that's not just shaping the future of surgery but actively defining it, one innovation at a time. If you've heard of the 𝗣𝗟𝗏𝗧 surgical system, you know Intuitive. They're the undisputed global leader in robotic-assisted surgery, setting the standard for what's possible in the operating room. Picture a surgeon at a high-tech console, manipulating robotic arms that can perform minimally invasive procedures with a level of precision and control that's simply impossible by hand. The Da Vinci system translates the surgeon's movements into micro-movements, eliminating tremor and enhancing accuracy. The result? Smaller incisions, less pain, and faster recovery for patients, already a reality in hospitals worldwide. For many, this means getting back to their lives sooner, with fewer complications and better outcomes. For investors, Intuitive's business model is a goldmine. Hospitals invest millions to acquire the Da Vinci system, but the real financial engine is the recurring revenue from proprietary, single-use instruments and accessories required for every procedure. This creates a steady, predictable income stream. This razor and blades model creates sticky, high-margin revenue that grows as more surgeries are performed. Every new hospital, every new procedure, means more recurring sales and deeper customer relationships. With over 8,000 Da Vinci systems installed and more than 12 million procedures completed, Intuitive's dominance is clear. Their technology is present in leading hospitals across North America, Europe, Asia, and beyond. Their economic moat is massive. Hospitals invest millions in trained staff, making it nearly impossible for competitors to break in. Once a hospital commits to Da Vinci, switching costs are enormous, and the learning curve for staff is steep. Intuitive keeps innovating too. The new Da Vinci 5 system offers huge leaps in computing power, advanced imaging, and real-time surgeon feedback, further cementing their lead and making procedures even safer and more effective. They're expanding into new areas like lung cancer detection with the Ion system, showing they're more than a one-trick pony. This diversification opens up entirely new markets and patient populations. Yes, the stock isn't cheap, but you're paying for quality, market dominance, and a long growth runway. Robotic surgery is still in its early days globally. There's a huge untapped market, especially in emerging economies. Demographic trends, demand for better outcomes, and emerging markets all fuel their growth. As populations age and healthcare standards rise, the need for minimally invasive, high-precision surgery will only increase. Financially, Intuitive is rock solid, billions in cash, little debt, and heavy investment in R&D. Their balance sheet gives them the flexibility to weather downturns and outspend rivals on innovation. Their data advantage is growing too. Each procedure trains their AI, making their platform smarter and more indispensable. This data loop improves outcomes, optimizes procedures, and creates a feedback cycle that competitors can't easily replicate. Risks? Sure, regulation and competition exist, but Intuitive's head start and deep integration make them tough to challenge. Their relationships with hospitals and surgeons are built over decades, not months. For long-term investors, ISRG is a high-quality buy-and-hold growth stock at the heart of a medical revolution. It's a rare blend of innovation, financial strength, and real-world impact. The Da Vinci 5 launch should drive upgrades and more procedures, boosting revenue for years. Hospitals are eager to stay on the cutting edge, and Intuitive's upgrade cycle ensures ongoing demand. As robotic surgery becomes the standard of care, Intuitive will keep rewarding shareholders. Their track record of growth and innovation is second to none in the medtech space. They're not just selling hardware, they're building a medical data and AI powerhouse. The insights from millions of procedures are shaping the next generation of surgical care. Look past short-term earnings. The real story is durable, long-term growth. Intuitive is positioned to benefit from decades of technological and demographic tailwinds. Intuitive Surgical is the blue chip of robotics, a flawless executor with a powerful mission and business model. Their leadership is visionary, and their execution is relentless. Intuitive Surgical stands as one of the giants in the medical technology space, with a market cap of $170.7 billion. The company reported earnings per share of $7.31, supported by a price-to-earnings ratio of just over 65. In 2024, revenues came in at $8.35 billion, translating to a net income of $2.32 billion. These numbers highlight its strong profitability and continued dominance in the robotic-assisted surgery market, where demand for its Da Vinci surgical systems continues to expand worldwide. If you want exposure to the future of healthcare, this is the company to watch. Few companies are as central to the next era of medicine as Intuitive. They're revolutionizing surgery, improving lives, and building immense value for investors. Every procedure performed is a testament to their impact on patients and the healthcare system. That's why Intuitive Surgical is a cornerstone robotics play. It's a foundational holding for anyone serious about investing in the future of medicine and technology. The future of surgery is robotic, and Intuitive owns that future. As technology and medicine converge, Intuitive Surgical stands at the forefront, ready to lead the way. Next, let's move from hospitals to warehouses with Symbotic, ticker SYM, a pure play on supply chain automation. In a world where speed, accuracy, and efficiency are everything, Symbotic is at the forefront of a logistics revolution that's quietly transforming how goods move across the globe. Symbotic's system replaces traditional warehouses with dense, cube-like structures where fleets of autonomous robots store and retrieve goods at lightning speed. These robots work in perfect harmony, navigating a complex grid to pick, pack, and move products with minimal human intervention. The result? Massive efficiency, higher storage density, and near-perfect accuracy, solving the biggest pain points in logistics. By maximizing every square foot and reducing errors, Symbotic helps companies save money, reduce waste, and deliver products faster than ever before. Their customers are industry giants. Walmart, the world's largest retailer, is rolling out Symbotic's system across all 42 of its regional distribution centers. This is a massive undertaking, and it signals just how critical automation has become for the biggest players in retail. This partnership alone gives Symbotic a $20 billion revenue backlog, unmatched visibility for a high-growth company. It's a rare level of certainty in a sector that's often unpredictable, and it sets the stage for years of rapid expansion. They're also automating all warehouses for C&S wholesale grocers and expanding through a joint venture with SoftBank, making their tech available as a service. This move opens the door to a recurring revenue model and global reach as more companies look to outsource their automation needs. Symbotic's moat is its technology, a seamless blend of hardware and AI-powered software that orchestrates entire warehouse operations. Their robots are not just machines, they're part of an intelligent system that learns and adapts with every order processed. Every deployment makes their AI smarter, optimizing routes and inventory management, data that competitors can't easily replicate. Over time, this creates a powerful feedback loop, making Symbotic's platform more efficient and harder to catch up to. While Symbotic is younger and came public via SPAC, it's not speculative. They have proven tech, blue-chip customers, and a clear path to profitability. Their systems are already live in some of the most demanding environments in the world. The addressable market is enormous. Every company with a warehouse needs automation to stay competitive. From retail to groceries to pharmaceuticals, the need for smarter logistics is only growing as e-commerce and consumer expectations rise. Labor shortages, rising wages, and the demand for faster delivery make Symbotic's solution essential. Companies are struggling to find enough workers, and automation is the only way to keep up with the pace of modern commerce. Execution risk exists. They must deliver on their backlog and diversify beyond Walmart, but their track record is strong. The company's leadership has shown they can scale complex technology and meet the needs of demanding clients. Symbotic is building the infrastructure for the future of commerce, much like Intel did for PCs. Their systems could become the standard backbone for warehouses everywhere, enabling a new era of efficiency and innovation. Their founder, Rick Cohen, built the company to solve real-world problems in his own business, giving them a unique, customer-focused edge. This founder-led approach means they're deeply attuned to the needs of their clients, not just chasing the latest tech trends. For investors, Symbotic offers high growth potential as warehouse automation shifts from luxury to necessity. As more companies realize they can't compete without automation, demand for Symbotic solutions is set to skyrocket. Each deployment is a massive engineering feat, delivering game-changing value to customers. These aren't just plug-and-play robots, they're custom-built systems that transform entire supply chains. The company is firing on all cylinders: disruptive tech, visionary leadership, and a de-risked business model. Their ability to innovate while executing on large contracts sets them apart from the competition. If you can handle some volatility and think long-term, Sim is a thrilling way to invest in the logistics revolution. The stock may swing, but the underlying business is built for the future. The scale of their opportunity is hard to overstate. As global supply chains become more complex, the need for intelligent automation will only accelerate. As e-commerce and retail demand faster, smarter logistics, Symbotic is poised to become the standard for automated warehouses. Their technology is already setting the pace for what's possible in the industry. They're not just selling robots. They're transforming how goods move from manufacturer to your doorstep. This is a fundamental shift in the way supply chains operate, with ripple effects across the entire economy. The future of supply chains is automated, and Symbotic is leading the charge. Their relentless focus on innovation ensures they'll stay ahead as the industry evolves. Symbotic, on the other hand, operates in the automation and robotics sector and currently carries a market cap of $5.05 billion. In 2024, the company generated $1.79 billion in revenue, but posted a net loss of $13.49 million. While not yet profitable, Symbotic is focused on scaling its advanced AI-powered warehouse automation solutions, positioning itself as a disruptive player in logistics and supply chain technology. For investors, this is a rare chance to get in early on a company re-architecting a multi-trillion-dollar industry. Few companies have the potential to reshape an entire sector the way Symbotic does. Watch this one closely. Symbotic could be many times its current size as automation becomes universal. The next decade could see their systems in warehouses around the world powering the backbone of global commerce. They're the backbone of tomorrow's commerce. As more industries digitize and automate, Symbotic's role will only grow in importance. Symbotic is a dominant force in robotics and automation for decades to come. Their relentless drive to innovate and solve real-world problems positions them as a leader in the space. If you want exposure to the logistics revolution, Sim is a top pick. The company's growth story is just beginning, and the potential upside is enormous. Keep your eye on Symbotic. As the world's supply chains evolve, this company is set to play a pivotal role in shaping the future of global commerce. Now let's talk about the robots you can't see, software bots transforming the modern workplace. These digital workers are quietly revolutionizing how businesses operate, taking on the repetitive, time-consuming tasks that used to bog down employees. While physical robots get all the attention, it's the invisible software bots that are driving a silent revolution behind the scenes. Meet UiPath, ticker PATH, the leader in robotic process automation, or RPA. Founded in Bucharest and now headquartered in New York, UiPath has become synonymous with automation, helping companies of all sizes streamline their operations and unlock new levels of efficiency. UiPath's platform automates repetitive, rule-based computer tasks, think data entry, invoice processing, and report generation, freeing up humans for higher-value work. Instead of spending hours on mind-numbing tasks, employees can focus on creativity, problem-solving, and innovation, while bots handle the digital grunt work. Their end-to-end platform lets businesses discover, build, and manage an army of AI-powered digital workers. From identifying automation opportunities to deploying and monitoring bots at scale, UiPath provides a comprehensive toolkit for digital transformation. The value is huge. Companies boost productivity, cut costs, and improve accuracy, making UiPath's tech a must-have for digital transformation. For many organizations, automation is no longer a luxury, it's a necessity to stay competitive in a fast-changing world. UiPath serves more than half the Fortune 500, proving RPA is now a core enterprise strategy. These are some of the world's most demanding customers, and their adoption of UiPath's platform is a testament to its reliability and scalability. Their subscription model creates sticky, recurring revenue that grows as customers deploy more bots. This SaaS approach means predictable income streams and strong customer relationships, which are key for long-term growth. UiPath's land and expand approach means existing customers increase spending year after year, a sign of deep value and product stickiness. Once a company starts automating with UiPath, they often find new processes to automate, deepening their commitment to the platform. The automation market is still young, with a $60 $100 billion runway ahead as more businesses embrace the fully automated enterprise. As digital transformation accelerates, the demand for automation solutions is only expected to grow, creating a massive opportunity for UiPath. UiPath is evolving fast, integrating AI and machine learning so their bots can handle complex, judgment-based tasks, not just simple clicks. This means bots can now process unstructured data, make decisions, and even learn from experience, pushing the boundaries of what automation can achieve. This shift to intelligent automation expands their moat and makes their platform even harder to replace. As UiPath's technology becomes more sophisticated, it becomes deeply embedded in customers' workflows, creating high switching costs and a durable competitive advantage. The stock has been volatile since its IPO, but the business fundamentals remain strong: robust revenue growth, a world-class customer list, and a leadership position in a market with massive tailwinds. While the share price has seen ups and downs, the underlying business continues to execute and expand. Competition is heating up, but UiPath's specialized platform is often superior for large, complex enterprises. Their deep expertise in automation, combined with a broad ecosystem of partners and integrations, gives them an edge over generic automation tools. They're also pushing toward profitability, focusing on disciplined growth and operational efficiency. By tightening costs and improving margins, UiPath is working to turn its impressive revenue growth into sustainable profits. UiPath rounds out the group with a market cap of $6.25 billion. The company reported earnings per share of 14 cents, though its price-to-earnings ratio sits at a high 79.79, reflecting investor expectations of growth. In 2024, UiPath posted $1.43 billion in revenue, but ended the year with a net loss of $73.69 million. At its current stock price of $11.17, shares are trading nearly 76% below their fair value estimate of $19.65. This steep discount underscores both the risks and potential opportunities investors see in UiPath's push to lead in robotic process automation. For investors, UiPath is a bet on the future of work, where humans and digital workers collaborate seamlessly. This partnership between people and bots is reshaping job roles, making work more meaningful and productive. As AI advances, UiPath's platform will only become more valuable. The company is investing heavily in research and development to stay at the forefront of automation and artificial intelligence, ensuring its solutions remain cutting edge. The productivity gains from automation are enormous, unlocking trillions in economic value. By automating routine work, companies can reallocate resources, innovate faster, and achieve results that were previously out of reach. UiPath is at the epicenter of this transformation, providing the tools for global digital change. Their reach extends across industries and continents, making them a key enabler of the digital economy. The current valuation offers an attractive entry point for patient, long-term investors. For those willing to ride out the volatility, UiPath could deliver significant returns as automation adoption accelerates. If you believe in automation's power to reshape business, Path is a compelling way to invest in the workforce of the future. The shift toward digital labor is just beginning, and UiPath is positioned to capture a large share of this growth. UiPath is the software brain of the robotics revolution, automating the digital world as ISRG and SIM automate the physical. While robots in factories and hospitals get the headlines, UiPath's bots are quietly powering the digital backbone of modern business. It's a turnaround story with massive upside potential. As the company matures and the market expands, UiPath could become one of the defining tech stories of the decade. For those willing to look past short-term volatility, UiPath offers a unique opportunity. The company's vision, technology, and customer base set it apart in a crowded field. The digital transformation is just beginning, and UiPath is leading the charge. As more organizations realize the benefits of automation, UiPath's influence will only grow. If you want exposure to the next wave of enterprise automation, keep Path on your radar. The company's growth story is far from over, and the automation revolution is only gaining momentum. UiPath is building the future of work, one bot at a time, shaping a world where human ingenuity and digital automation go hand in hand. There you have it. 3 companies leading the robotics revolution: Intuitive Surgical in healthcare, Symbotic in logistics, and UiPath in software automation. Each offers a unique way to invest in the future and build long-term wealth as robotics and AI reshape the economy. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Details below. Now, your turn. Which robotics sector, medical, logistics, or software, has the biggest growth potential? Let me know in the comments. Don't forget to like, subscribe, and share your thoughts below. Thanks for watching. See you in the next one.